The big, huge question mark is not when they start and what they do in 24. It's how this progresses in 25. If you look through 26, there is 9 cuts priced in, which if you don't have a recession, that's a really deep cutting cycle, regardless of what you think about where the real Fed funds rate should be. So when we think about the path into 25, we think the Fed will still be data dependent, which is why we think that they want to keep their options open in 24. Don't cut at every meeting. Don't accelerate rate cuts, because that then allows them to be patient and see how the data comes in 25.
I'm telling you to ignore the real rates, I think. Yeah? You love the real rate.
Well, no, I just look at it as an indicator.
You love the parlor game.
We're range bound.
Yes.
Is what I put Kim. And the thing here with Kim Dawson is her fluidity across the 4 accounting statements is an act of God. We're starting to see earnings, and it's like the worry is OMG revenues aren't going to be where they are. Free cash flow growth's not going to be there. I'm saying baloney. It's one by one, every stock matters. Do you detect a trend today in the dynamics of Cam Dawson ratios across the accounting statements?
There is a very important thing that we're seeing with revenues versus earnings. Revenues aren't beating at a very high pace. Only about 40% of companies are beating on revenues. But they're beating on earnings, which means companies are pulling all these levers below the line in order to make earnings materialize. And some of those are low quality, which is why stocks haven't necessarily been reacting well.
She knows she's laughing at me. Can you see there? She knows, she's laughing at me. Cam, the bottom line is that theory's there, but the key thing is 40% of stocks are getting it done. How do you discern those 40% of stocks that are delivering unit and price revenue mix that gets it done?
It's pricing power. And I think this is the biggest theme and question mark over the next 6 months.
It's what's going to be written in the next week. This is coming. Jack Welch is coming back.
Well, you are hearing from companies time and time again that they're having trouble passing on higher costs to customers. And this is because inflation is falling. When you see CPI fall, that's effectively saying that companies aren't able to pass on these higher prices. That translates to margin pressure if this continues. And I think that would be the question for 25. Maybe the Fed likes that inflation's falling. Maybe consumers like it. Corporate profits might not like it as much.